Okay, guys, I'm going to go ahead and get started. My name is Audra Wilson. I'm the owner of WATS CPA firm, and I was contacted by the Riviera Beach CRA to put on a webinar for you guys in relation to the small business loans for business owners affected by COVID-19. And if at any point you have any questions regarding the information on the presentation, I ask that you hold your questions to the end because we may review the information that may answer your questions. And at the end of the presentation, I will answer all questions at that time. Can everybody hear me okay? Just a quick yes in the chat. Okay, thank you so much. So today we're going to review the different loan options as well as the SBA disaster loan, the payment protection loan, and then again go over the Q&A section. And just a little bit of housekeeping, this webinar is being recorded for future viewing. So anyone who is registered today will receive a link to the recorded webinar shortly after. Okay, so there's several types of funding opportunities out there. Although the government is currently out of funds, there are different options, and we're waiting right now for the House to approve the second round of PPP funds. So right now we have the bridge loans, the SBA economic injury disaster loans, and you guys probably have heard about that $10,000 grant. We'll talk about that, as well as the big one, the payment protection loan. And then I also have a lot more resources and links for you to browse through if you're not able to get funding from one of those three sources. Okay, as I've mentioned, my name is Audra Wilson Russell. I'm the owner of WATS CPA firm. I'm a virtual accounting firm located in the Delray Beach area. I have been established since October of 2012, specializing in accounting, tax preparation, and CFO services. I attended Florida State University, where I got my bachelor's in accounting, and then on to Lanier University for my master's in business administration. I am an advanced certified QuickBooks Online Pro Advisor, as well as a certified advisor for Zero Accounting. So as I mentioned, the House is expected to give the final approval today on legislation to pump $320 billion into the payment protection program. Of that $320 billion, about $60 billion of that is earmarked for community-based lenders and smaller banks and credit unions. So there has been a lot of complaints about the bigger banks not being able to process your loans, or bigger banks not getting back to you in a timely manner. I would definitely say start a relationship with a smaller community bank or credit union if you have not done so, because I am hearing success stories from clients who applied to a bigger bank, nothing happened, no response, and then they went on to a smaller community bank and received funds. In the state of Florida and throughout multiple states, there are bridge loan programs. This one is specific to the state of Florida, and just as an FYI, the program is currently closed. They are out of funds as well, but I thought that I would give you the information for when the program opens back up, or if the program opens back up. And as again, this is for the state of Florida. It's a short-term loan. It's interest-free. It's not a grant. It's an actual loan that you would have to pay back. And to qualify for it, you would need to have at least 2 to 10 employees. So this isn't for sole proprietors. This is for an employer with 2 to 100 employees. With this loan, you can receive up to $50,000. It's a 1-year loan term, so you will have to pay this loan back. And in order to get a bridge loan, you would have to satisfy any previous bridge loans you have. So if you have an outstanding bridge loan currently, you cannot get another one until the first one is satisfied. And the interest rate on any unpaid loans past that 1-year mark is 12%. Okay, so now the SBA Economic Injury Disaster Loan. Right now, they're out of funds. And as I just mentioned in the beginning of the slide, that the House is voting today to allocate more funds for the disaster loan as well as the payment protection loan. And who's eligible for this? Small businesses with 500 or less employees, nonprofits, sole proprietors, and independent contractors. So yes, if you are a sole proprietor, you are eligible to apply for the SBA Economic Disaster Loan. The loan is up to $2 million, paid back over 30 years with an interest rate of 3.75 if you are a for-profit business. If you're a nonprofit business, that interest rate is 2.75%. Okay, so along with that loan is a grant where it's up to $10,000. So, and the way that they're doing this is by the number of employees you have, up to $10,000. So you're getting $1,000 per employees. You have 3 employees, then you have the potential to get up to $3,000 on this emergency grant. And it's not required to be paid back. So this is an actual grant. The application is very short and simple. You just give basic information about your business, such as your EIN, your start date, and then they ask a few financial questions that you would find on your profit and loss statement. The application is closed right now, reopening soon. What I will say about this one is I'm hearing that the SBA hasn't gotten back to people even after applying, or when they go back to check the status of the application, there's nothing there. The only thing that I could say is continue to check on the status, apply again. If you haven't heard anything or seen any confirmations or emails, apply again as soon as the program opens up. So now the payment protection loan, this is the hot topic. This is the loan that's forgivable if you use it in the correct way. It opened up April 3rd for small businesses and in proprietorships and sole proprietorships, but then it opened up on April 10th for independent contractors and self-employed people. Right now, it's closed again because the program ran out of funds. It gave us a deadline of June 30th to apply, but all the money ran out prior to June 30th. So, as I mentioned, today they are voting to reallocate or push out more funds to these small loans. And so I will have a link here in the slides so that you can find a lender that's in your area. So as I mentioned, that they are allocating $60 billion to the smaller community banks and credit unions. Use that link to see what lenders in your area are participating in the payment protection loan program, because all banks are not participating in the program. Okay, so there's a covered period. between February 15th through June 30th. So funds used to retain workers, maintain payroll, or make mortgage and lease payments and utility payments. The entire purpose of this loan is to cover employees' wages. It's to help you get your employees off of unemployment and re-employed again. So if you do that and you do it successfully in the way that it's supposed to be done, then this loan will be 100% forgivable. You have to apply for forgiveness through the bank that you receive the funds from. And I think you have up to 60 days to actually apply for forgiveness from the bank. And then again, who's eligible to accept this or to qualify for this type of loan is the small businesses with 500 or less employees, nonprofits, and sole proprietors, independent contractors. So I know you guys have heard some of the bigger restaurants like Shake Shack or whoever has secured some of these loans, and you're thinking, like, how can a Ruth Chris or someone qualify for this loan when they have more than 500 employees? Well, there's a clause in here where for restaurants, it's 500 employees per location, I believe, or per entity. So if the corporation is set up where the entities are split and they don't have more than 500 employees at one location, that's how they're able to secure those loans. The loan is up to $10 million or 2.5 times your monthly payroll costs, whichever is less. And today we're going to calculate what that 2.5 times monthly payroll cost is.
Hey, Audra.
Yes.
This is Rich Rodriguez. How are you?
I'm well. How are you?
Good. So is this like a question and ask kind of thing, or we're just letting you do your thing and afterwards ask the questions?
Okay, yes. So I'm going to do my thing. And then if you have questions, we're doing a Q&A session at the end of the presentation.
Okay, great. Thank you.
You're welcome.
All right.
Okay, so the payment protection loans, again, you're eligible to have all or a portion of the loan or the principal forgiven if the funds are used for certain qualifying costs over the next 8 weeks. And that 8-week clock starts ticking once you receive that money. So if you receive that money today, from today in the next 8 weeks will determine if that loan is forgivable based on how you use those funds. With the PPP loans, there's 4 main, or really 3 main categories of where or how to use those funds. It's through payroll cost, utilities, mortgage interest, or rent. So those are the 3 main categories where you can utilize the funds in order to have it forgiven. A stipulation on top of that is payroll has to be at least 75% of the expenses to have the loan, the entire loan forgiven. So only 25% on rent and utilities, and the other at least 75% on payroll costs. Because again, the entire purpose of this loan is to rehire your staff. Even if you have a business that isn't operational right now and your employees are at home, your doors are closed, it's still a way to keep them employed and off unemployment. The terms of the loan, it matures in 2 years. It has an interest rate of 1% with guaranteed deferral of repayment for 6 to 12 months. So you can defer payments up to 6 to 12 months. And then after that 12-month mark, you're paying the 1% interest rate. You cannot use the payment protection loan for the same purpose as the SBA Economic Injury Disaster Loan. So on your SBA Economic Injury Disaster Loan, when you apply for that and it asks you for the purpose of the loan, you will not put payroll, utilities, or rent if you're also checking those boxes on the payment protection loan. The government doesn't allow you to have both loans to cover the same type of expenses. Okay, so payroll costs. What is payroll costs? Salaries, wages, commissions, tips, and it's capped at $1,000 per employee. So if you have an employee that makes over 100 grand, then you're going to back out the excess in the calculation, and you'll see exactly what I mean when we go over a calculation. Not only are the wages and the salaries included within payroll, but also the benefits, vacation, prenatal, family, medical leave, sick leave, all that payroll related stuff, insurance premiums, this all gets included in the calculation. State and local taxes. Here in the state of Florida, we don't have state taxes, but we do have unemployment taxes, or reemployment taxes as we call it here in the state of Florida. You would include that, but federal payroll taxes are not included in the calculation. For a sole proprietor or independent contractor, your payroll costs would be the wages, commissions, income, or net profits from self-employment, again, capped at $100,000. So touching a little bit on the documents needed in order to apply for this loan. If you are an employer, a business that pays employees, these are the documents that you want to gather now and be prepared when the loan program opens up. Or actually, I wouldn't even wait. I would start contacting those local banks now to get in their application queue if you can. So any health insurance records or invoices, anything to support the benefits portion of the payroll calculation. Any retirement plans, if you match your employee's 401k, your employer portion of that is included within the calculation. Gather those documents as well. And then, of course, your payroll records by employees for the period that you're using, and I'll get to the period. And then also your state unemployment tax records. If you're using a payroll company such as ADP, Gusto, Benefits Mall, PAYCHECK, all of this can be found within the platform of your payroll company. If you have an accountant that's filing your payroll for you, then reach out to your accountant so that they can provide you with these reports. Okay, so the banks, some banks are allowing you to use January through December of 2019 as the 12-month period. That's very easy, very simple, very clean. So then what you would need is to provide your payroll form 941s, your W-2s, and your W-3s. Some banks are requiring April 2019 through March 2020, and it gets a little bit more complicated because now you got to go and run reports for that very specific set of time. So check with your bank to see which period they are requiring you to have, or just have both and just be ready, because whichever gives you the higher calculation based on your payroll cost, you may want to go with that number anyway. If you are a sole proprietor, you want to have your 2019 Schedule C. Line 31 is pretty much the calculation. Line 31, or a 1099 box 7 that shows that self-employment income or that 1099 income. If you don't have a 1099, then an invoice or bank statement, something showing that you receive money. And again, each bank may have their own process or their own stipulation. This is just a comprehensive list of things to have to be prepared when you do go to the bank. Again, I set the 1099s, the Schedule Cs. Now, if you are a sole proprietor with employees, then you want to refer back to the prior slide with all the payroll forms and tax returns to help calculate your cost and use as backup for the loan. So now this is the actual application. This is the application from the Treasury Department. Again, if you're just joining us, after the call, you're going to receive an email with a link to the presentation and a link to all of the links to download all the resources within the presentation today. So this is the generic application created by the Treasury. Some banks are using this application exactly, and some banks have their own internal applications. So again, it's just going to depend on which bank you go to. So what we're reviewing today is the Treasury's application for the PPP loan. So pretty self-explanatory, very easy. It's about 4 pages, and 2 of those pages is just content, text for you to pretty much read through and understand. But the meats and potatoes is about 2 pages. In the first section where it says check 1, you'll check whether you're a sole proprietor. Again, those sole proprietors are people who do not file a separate tax return, but have a Schedule C on their personal tax return. So at this point, what I would like to do is launch a polling question to see who's all in the room, to see if you are a business owner, what types of tax returns you have. So if you can, please take a moment to answer the 2 polling questions.
Have a C Corp, Audrey, and also 2 LLCs.
Okay, so you can just select one. Okay, and I have about half of the results. Okay, 81% of the results, and I'll share the results with you guys. So almost 90% of the people on the call has a small business, and let's see, 44% are S Corp. Okay, and 33% sole proprietors. Awesome. Thank you guys. Okay, so I believe, verify with your bank, but I believe you would need to fill this out for each entity. So if you have more than 2 LLCs or more than 2 S Corps, more than 2 C Corps, then you would need to complete one for each entity. Here at the top is where you would check if you are a sole proprietor or partnership, C Corp, S Corp, LLC, all of that stuff. Okay. All right. And so this is the second part where it asks a few questions. So you'll just go through those questions, check yes or no, if it applies to you. See, so a few places where you would put your initials, some certification questions towards the end of the application, and then you sign and date, and that's pretty much it. That's the application. So the trickiest part of the application is calculating the average monthly payroll, which we're going over next. So this is an example of an application from Bank of America. And in this example, the client has salary and wages of $120,000, and I'll let you know where I got that number from. Less amounts included in box 1 for employees whose residence is outside the U.S. So pretty much what that is if you have any employees and their residence is not in the U.S., you cannot include their wages as part of the calculation. Number 3, less any compensation paid to an employee in excess of $100,000. That's where you would back out any employee who made over $100,000, because you can only consider up to $100,000 of each employee's compensation in this calculation. Number 4, payment for provision of employee benefits. So that's that 401k, any insurance, all of that extra stuff that doesn't fall within salaries and wages and commissions. And then number 5, your state and local taxes in that number. So that column is the total for the entire 2019 tax year. And then the column next to it is just divided by 12 to get the average monthly cost. And then the total of your average monthly cost, that's the figure that you're going to take and multiply by the 2.5 to get what your maximum loan amount will be. Remember, if that number is more than $10 million, then the maximum amount that you'll be able to get is $10 million. So it's $10 million or the lower of the 2.5 total payroll cost. Okay, so for the 120,000 that I had on that on there for your salary and your wages and your commissions, it's straight off of form 940. Off of 940, line 3, total payments to all employees is where we get that number. Okay. In this scenario, they don't have any employees living outside the US, so that's 0. In this scenario, again, no employees made over the 100,000, so that's 0. Okay, so this is the Florida quarterly payroll tax report. This is the state tax portion that I mentioned is included in the payroll. So on this particular tax return, you would look at line 9A for total account due for each quarterly report. This is just one of the reports. So you would have to pull all 4 of those reports and add those 4 amounts to put on the application. So that's where you would put on line 5, the total of that. So again, you're going to take your average monthly payroll, that 11,350, multiply that by 2.5 to get your total loan amount, and put that directly on the application. Average monthly payroll, 11,350 times your 2.5, which is your 28,375. And again, it has here the purpose of the loan, payroll, lease, rent, utilities on the application. So what if I'm self-employed or an independent contractor? If you're self-employed or independent contractor, your Schedule C is going to be pretty much the source of where you would get your payroll calculation. Your Schedule C can be found on your personal tax return form 1040. Line 31 is the net profit from your business. If you have a loss in your business, unfortunately, you will not be able to qualify for this loan. You have to show profit because they're using that profit as the calculation or the determination for your loan amount. You may be able to use just your 1099 from 2019 or an invoice from 2020, just contact the bank to see what other requirements they may have if you do have a loss. So in that scenario, line 31 off of your Schedule C would pretty much be the salaries and wages. Okay, so now if this is making your head spin, that's okay, because you have accountants and you have payroll companies. This is a report directly from ADP that calculates everything we just went over. So if you are using ADP, I think Paychecks even has a report, Gusto has a report where you don't have to do any of this calculation, too much of this calculations yourself manually. They have prepackaged reports that are available now to run. The only thing that I would say be cautious of is the employer benefit cost, to make sure that if you are paying any employee benefits outside of the payroll platform, that you include those costs as well. So this is a report, a sample report that I downloaded from ADP that calculates what the gross wages are, the employee benefits, and the average monthly payroll. So just a click of a button to run that report and get those figures, as opposed to you trying to manually calculate everything. So now just to do a recap on the difference between the Paycheck Protection Loan versus the Economic Injury Disaster Loan. The PPP loan, again, it's used for payroll expenses, salaries, that kind of stuff, mortgage interest, rent, and utilities, nothing else. And 75% of that has to be on payroll costs. The Economic Injury Disaster Loan could be used for payroll, any other debts, any accounts payable, pretty much an array of other things. Okay. The maximum loan amount, again, 2.5 times your payroll, or $10 million, whichever is lower, for the PPP, and for the EIDL loan up to $2 million. Interest rate on the PPP is 1%, as opposed to 3.75 if you're for profit, 2.75 nonprofit on that EIDL loan. Payment terms on the PPP is 6 to 12 months. It's a 2-year term, so you have 2 years to pay it back with deferred payments over 6 to 12 months. And for the EIDL loan, you have up to 30 years to pay it back. 100% of the PPP loan can be forgiven if you use it the correct way. For the EIDL loan, it's not a forgivable loan, so you will have to pay the entire loan back. And again, these loan programs right now are closed. We're still waiting on the government to give the final approval today. And once it's approved, then, you know, things happens with the bank and all of that stuff, then they'll open up the applications. So you have to go directly to the bank to apply for the PPP loan. Now, this is a plethora of resources that Gusto Payroll Company has put together for alternative methods of funding. So if you can't get any of the federal loans or anything like that, I would encourage you to go to this spreadsheet and just look through the different resources to see if you qualify for anything. There's at least like 375 different private companies out there doing like their own thing or their own funding. So go through the spreadsheet on the private resources tab to see if you qualify for any of that stuff and go and apply. Just more links here. I do have a YouTube channel where you can find more videos that I've discussed on the PPP loans, the disaster loan program, or any other tax and accounting related resources. There is that comprehensive checklist that I chopped up and showed you in the video. You can download that from JJ the CPA. I have the link there. Okay. The link for the economic injury disaster loan is there. Again, the portal is closed. We're still waiting on when it'll reopen. I have a link here for you to look for lenders in the area. Again, try the smaller community banks or credit unions, because I'm hearing clients that have a better success rate with those smaller banks. And then that application that we went through, I have a link here as well. Again, your bank may have their own application, but some of the smaller banks are definitely using the Treasury application that we just reviewed. And then there's some FAQs here. So if you still have more questions after our webinar, feel free to kind of peruse through the FAQs to see if you could find more information there. The Florida Bridge loan, again, that program is closed, but there's a link for future reference for when they do open. And then for unemployment. So if you are an employer and your employees are filing for unemployment, you can go on that link, because you have to do some administrative things there when an employee files for unemployment. And then if you are an employee looking to file unemployment, you would use that same link there to apply for benefits. And then again, I mentioned these different payroll companies. This is a Gusto link if you guys are interested in starting payroll. That's a link where you can go and sign up for Gusto payroll if you'd like. Okay, again, just a little bit about my company. I'm a virtual accounting firm. I offer CFO advisory services, tax solutions, accounting and bookkeeping, primarily to childcare providers, but I do work with other small businesses as well. I'm passionate about helping them reach their business goals. And the different services that I offer are business advisories, budgeting, cash flow forecasting, any advanced reporting, KPI reporting, accounting, bookkeeping, tax returns, tax plannings, online bill pay, invoices, app advisory, payroll access, cloud accounting migration, and software training. I'm pretty much everywhere. You can find me across all social media platforms on LinkedIn, Facebook, YouTube, Twitter, Instagram at WATS CPA. So now at this time, if you have any questions, you can either type it in the chat box or unmute yourself. Thanks, Tom.
Hi, Audrey.
Hello.
Hey, very informative. Thank you. So this is Rich again. And I actually have been talking with my bank, which is Fifth Third. And because most of my employees and most of the people I pay, is that Tina? That she looks so familiar. So the people that I pay through 1099.
Mm-hmm.
So because they're 1099, I'm being told that they have to apply themselves.
Mm-hmm.
Does that make sense?
Yes.
Correct.
They are self-employed individuals, and since self-employed individuals qualify for this loan, then they have to apply on their own. So you won't be able to use their cost in your calculation because they're using their own cost in their calculation.
So the fact that I pay them, so the way I pay them is I pay them out every couple weeks. But I pay them, and then at the end of the year, I 1099 them. So I'm still paying them,
As contractors, so not as an employee. They need to be employees where you're withholding payroll taxes as well. So if they are a contractor, you cannot use that cost as part of your payroll calculation.
So I don't get it. If I'm the one paying it out, still on a weekly basis, they still come to me. So how does
Right,
that
but they're
work?
not considered an employee, so you can't use it as payroll cost.
So I can't. I need to stop paying them then. In other words.
Well, that's a conversation for something outside of this. Right now, I can just tell you what the rules are. If you would like a separate consult on if you should be paying them as an employee versus a contractor, there's different rules that determines if they are a contractor or an employee.
Gotcha. Okay. So what about that 10K? I heard for what is that? Is that different than the PPP program?
Yes, it is. So the 10K, the $10,000 grant, is a part of the SBA Economic Injury Disaster Loan, where
Hmm.
they'll advance you up to $10,000 on that loan, and it doesn't have to be paid back. So that's totally separate from the PPP loan.
So because I'm a bit, I mean, I write off a lot of stuff. Okay. So because of that, I'm kind of hurting myself, obviously. I show very little income. Obviously, I make a lot more, but so this is not going to help me at all, of course.
Yeah, so like the lower your payroll costs, then the lower the loan amount. So what we can do, if you want to dive deeper into your personal situation, contact me and then we can take this conversation offline.
Cool. Thank you.
You're
Hey,
welcome.
Sheila.
Hey, who's that?
Rich Rodriguez.
Oh my God, how are you?
I'm good. I'm good. Anyway, we can talk later. I thought you
The
Thank
looked
you for
familiar.
your
best.
questions, Rich. I appreciate it.
You're welcome, Audra.
Okay, Tina, you had a questions. So I've submitted the PPP application. My bank said my app was approved and they have sent to the SBA. Am I able to apply again? With that one, I would hold tight, reach out to the bank and just keep in contact with them because there are a lot of applications that are in queue, but unfortunately funds ran out. So the ones that are in queue right now will be or should be the
The
ones
first
that
one's
are
paid
first
out.
in line to get processed.
Okay, but another question, the original, like the $10,000, that was something separate and I applied for that right away. But I think you may have told me the other day that if I haven't gotten it yet, I'm probably just not going to see it. Is that what you,
At this point, no, you probably won't see it for that EIDL loan in the $10,000 grant. So I would just reapply once the program opens back up. But with the PPP, you at least have a person in the middle that you can go to, which is your bank, to check on the status. With the economic injury disaster loan, there's really no one to go to besides the SBA, who's not really getting back to people.
right? Okay.
So,
I'm sorry, Sheila, you had a question?
right, so if you apply for that stimulus which she was talking about and have not heard back, you can reapply for it if it's still open?
I would say reapply if you have not received a confirmation or heard anything, because at one point there was a separate portal and some people started applying and then they revamped the entire website and then they went back to check on their loan and the application just wasn't there. So if you're one of those people who applied before they changed the interface of the website, then I would say reapply.
Got it.
So will I have this information sent out? Yes. Okay, if a person has a W-2 and have a side hustle due to COVID-19, they are not able to do their side hustle like normal, but at this time still have their W-2. They are an independent contractor. Can they still apply? Yes. So that self-employment income from your side hustle does qualify you to apply for the PPP loan. for those lost wages. Okay, Leah, you had a question in regards to forgiveness?
Yes, yes. Great presentation. Thank you very much.
Thank you. I appreciate it.
Yes, my question is regarding the loan forgiveness feature and docs. If I'm an employer and my employees currently are no longer employed and they're in the QE for unemployment compensation, say based on the example that you used, I'm eligible for the 28,000 and some change.
Mm-hmm.
And I would have to hire 75% of that. I would have to use to hire the staff back, or hire my staff back, or new staff people. How would that work?
So now there isn't anything within the guidance about if it has to be the same staff, but the idea is for you to rehire the staff that you laid off. So you could get a bank that's real picky and choosy about, well, you had Maria on here, Maria's not on here again. So I would say reach out to the bank that's approving your loan to see if it has to be the exact same person that you laid off. The only thing that I do know for sure is that your wages, or the amounts that you were paying them, you can't cut their wages and you can't lay them off. And if you have to restore them by June 30th in order to be forgiven for the loan. But the question of, does it have to be the same person? You may want to clarify with your bank.
Okay, thank you very much. I appreciate that.
You're welcome. Okay, can a person I'm sorry, I'm going down the list and then I got you, Chris. Okay. Can a person who run an LLC, who ran a loss in 2018 and 2019 still apply? So if it shows a loss on line 31, you will not be able to qualify based on your Schedule C alone. But again, some banks may take the 1099 if you don't anticipate a loss in 2020, or they may take an invoice from a client or customer. So just reach out to the bank to see what information that they're willing to accept to have you apply for the loan. Okay, Norman, you mentioned that if line 31 on schedule, well, that was it. That's what we just discussed, the loss. If there's a loss, then there's really no loan unless the bank is accepting any other forms of compensation like the 1099 or an invoice. How to apply for the SBA injury disaster loan. So there's a link that's on the slides that'll take you directly to the website. When that website portal opens up again, just keep checking back to see when they will reopen up. But there'll be a link within the slides for that. So for unemployment for 1099, Rich, can you clarify your question, please?
So for those that, because they're going to try to apply for their own 1099, obviously, now that you've made it a little bit more clear for me, so they can just go into unemployment for this time and basically just apply, right?
Yes, they can apply for unemployment because with the new CARES Act, they're opening up unemployment to self-employed people. I'm hearing that they're having a hard time getting it approved, and then some are getting denied the first go around. So if you get denied, reapply. So they can do the unemployment route, or they can go the PPP loan route.
So I'm going to have them go both ways. And then so they go what to, is it the floridajobs.com?
Within the link that's going to be on, let me share my screen again. So it's going to be on the link.
Okay.
So the one that they're going to do, let me know if you can see my screen.
Yeah, I see it. I mean, I see the question and ask.
Okay, so where they're going to go is for unemployment. Right here, this link that says reemployment assistance.
Okay.
Okay, so that's where you go. That's the link for unemployment.
Great, thank you.
Okay, Chris, what was your question?
Yeah, I wanted to piggyback on what Richard was saying. All my employees are independent contractors. So the economic injury loan is in a business standpoint, can I even qualify, or you have to only have employees, or how does that work for the 1099 employees? And even some of my 1099 employees, which are contractors, have been, laid off since the
Okay.
start of this thing.
Okay. So if you have 1099 contractors, you're not using any of the amounts that you pay them as part of your cost. So if the bulk of your workers are contractors and not indeed employees, then you may be better off applying for the economic injury disaster loan as opposed to the payment protection program loan. Payment protection is ideal for people with the higher payroll cost. So if your payroll cost is low, then you can apply for both, but in order for that loan to be forgiven on the PPP side, you need to use that money on at least 75% of payroll. And if your payroll, is low to begin with, then you're going to get a low loan amount to begin with.
So you're saying the one, I'm sorry.
No, go ahead.
So like, with the business that I'm running, we've lost gross revenue due to COVID-19. So I could apply for economic injury, but let's say I get that loan or whatever, so I can use it to gain more business.
You can use it to pay for like operational costs. So it could go towards your rent, your utilities, your marketing, your accounting, all of that stuff to keep you afloat, to run your business pretty much. So the bonus about using the economic injury loan is that it's not tied specifically to having to use it for payroll costs.
Okay. And do you know any small businesses that actually receive this loan? Because all my business buddies, nobody has gotten this.
Personally, I do have clients who received a PPP loan. I have accountant friends whose clients received both economic injury disaster loan and PPP.
Wow.
A few friends who received the $10,000 grant. So there are small businesses receiving money, and the ones who are using the smaller community banks and credit unions are the ones who are successful at.
Oh wow! Oh, that makes sense. I'm using Chase, so.
Yeah, you might want to look at a community bank.
Community bank? Okay, go ahead. Sorry.
What about Fifth Third?
They're small enough to where you may be able to get something a lot quicker than like a Wells Fargo or a Chase.
And they're looking at, I guess, on the economic injury, are they looking at credit and they're looking at all that? Is that kind of basically applying for like a loan then through SBA?
It is a loan. It's exactly what it is. So with the economic injury disaster loan, they do look at your personal credit. For the payment protection program, they do not look at your personal credit.
And what about for the grant?
Well, the grant is a part of the economic injury disaster loan. It's pretty much a checkbox that you tick off saying, yes, I would like to be considered for in advance.
I mean, my personal credit's not bad. I mean, it's 700. It could be better, but I've never applied because, I don't have like, I don't pay W-2. Everybody's 1099. So.
Well, the economic injury disaster loan would be better for you because it's not tied directly into just payroll. You can use it for operational expenses as well.
Gotcha. Okay.
Okay. And so let's see, for people with the loss of rent income. So with the rent income, are you referring to like landlords who are Schedule E? Because unfortunately, they don't qualify for the PPP loan. Tiffany. Okay, what is the max on the EIDL loan? The max is, I believe, $2 million for the EIDL loan. What is next?
Hi. Hello. Hi, this is Leah. The reason I asked is because during the last iteration, I thought they had lowered it to at one point 200,000 and then 25,000 and then 15,000. That's not correct?
And not that I've heard of as far as like the actual loan amount.
Okay. Okay. All right. Thank you.
You're welcome. All right. Schedule C and Schedule E has no pay. So Schedule E does not qualify for PPP. Schedule C, if you do not have any employees, then you will not have any of those payroll forms. Then that's when they'll take your line 31, your net profit from Schedule C. Do you have an existing customer with smaller banks? If so, do you know one that accepting? I know that Legacy Bank of Florida, the Delray Beach location, is currently accepting PPP loan applications. And again, I have a link here for PPP lenders that you can click on and put your zip code to see which banks in your area are participating in the program. Okay, so at this time, I would like to do an acknowledgement. I'd like to acknowledge the City of Riviera Community Redevelopment Agency and the City of Riviera Beach Commissioner Shirley Lanier, District 3, for putting this webinar together and allowing me to come here and present this information to you guys today. And thank you all for your questions. Again, this webinar is being recorded, so you will receive a recording of it as well as the presentation with the links from today. Thank you guys. I really appreciate it. Enjoy your weekend.
You too.
Thanks.
Thank you,
Thank you
Audra.
for the webinar. Thank you.
You're welcome.
Thank you.
Thanks, Audra. I emailed you.
Okay, awesome. Thanks, Rich.
All right, thanks.
Bye.
Take care.
Same to you.